Okay, folks, welcome to Best Stock Charts for the coming week. And this is Bob Desmond at the Contrarian Trader. And happy Thanksgiving to everyone. I hope everybody enjoyed the holiday. I received a bunch of Thanksgiving Day well wishes from you folks, and I really appreciate it. My holiday was great. Looking forward to the Christmas holiday, and happy Hanukkah and Merry Christmas to everyone out there. Happy Kwanzaa as well. And what's the other one? Festivus. So it's the holiday season. The cheer is on. Let's get started with best stock charts for the coming week. So here's the rundown. I'm going to talk about some housekeeping first off. Secondly, I want to roll into the chart of Facebook and some news that came out over the weekend. Then we're going to talk about the events unfolding in terms of the charts, not necessarily the news, but what the charts are telling us about the banks over in Europe and General Electric here in the United States. What does it all mean? I've been talking about Facebook, General Electric, and Deutsche Bank, their charts for several months now, and none of it was bullish. It was all bearish, and you could see that the condition of these stocks right now, it looks like they are all going lower. Then I'm going to leave off with some watch stocks for the coming week. A few of them are extreme oversold stocks. And in this type of market environment, I really don't want to trade the momentum stocks because momentum trading right now is dead in the short term, not long term, but in the short term. I want to play the extremes. I want to play those stocks to the long side that have a probability greater than the overall market for rebounding, whether it be due to a short squeeze, whether it be due to an institution identifying the fact that there is value at where the shares are currently priced. So let's kick things off first with housekeeping. The new website is coming out and coming out very soon. We're targeting the last week of December, first week of January. So for those members who are members prior to the launch of the new website, which is going to have a lot more value, you will not see a membership fee increase. If you enroll, if you join after the website launches, there will be a new pricing structure and it will be higher. So take advantage of current pricing, get locked in right now, and begin earning through saving as we proceed into the new year. All right, let's begin the charts off with Facebook. Now, over the weekend, news came out. Let's go to it. News came out on Zero Hedge in an unprecedented move. Parliament, the UK Parliament, seizes Facebook documents after latest Zuckerberg snub. I have been saying Mark Zuckerberg is the poster child for all that is hated in Techland. These social justice warriors have a target on their back vis-a-vis the federal governments of the United States, the UK, and the European Union. I've been warning about the chart of Facebook for months. In fact, you can go all the way back to March of 2018, and I was warning. In fact, I'm going to play you a clip of what I had to say about Facebook back in March of 2018. Here you go. It may have been that break. Now, you can see that on a weekly basis, we're putting in lower highs and lower lows. So we had the RSI, which has been telling us since November that there's something wrong here. Stochastics the same thing. And whenever I see the Stokes trading down below the 50 level, I always teach members that rallies fade. Rallies fade. And what happened the week of February the 26th? We rallied. The rally faded. Yes, we bounced back. But what's happened since? We faded once again. Now we are rolling over once again. And if we break down below this prior low and we make a new weekly low, especially after the Fed meeting, it's all over for a while. And if we get a breakdown below 167.18 and we close there on a weekly basis, it's done. It's a short all day long. Members will be looking to short Facebook on any break. But what happens if the Fed meeting goes well and they come out with a dovish tone and stocks rebound? We'll look to buy Facebook as a long when it closes back above resistance. Not until then. As it stands right now, the probability of Facebook breaking down further is very, very high. The probability of us retesting this support level is extremely high. Why? It's because we had broken out, and now we have broken back down below a prior breakout point. That is a breakout point failure or a bull trap. When you get this type of price action, on volume no less, the probability of you seeing the lower band of support, again, is very, very high. The probability of it breaking is also very high. So Facebook is purely a watch. I wouldn't do anything right now with these shares until after the Federal Reserve meeting, and whichever direction Facebook takes with the market, I would go in that direction. But it must either A, break down below support for me to get short, or B, recapture resistance for me to get long. One of the two, but it must do one or the other. So until then, sit on your hands, display patience. I wasn't born with patience. It is a learned behavior on my part. But if you master it, it's very profitable. All right, so let's go to the chart. This is a daily chart. Let's go to a weekly chart. So here was March. We broke down below key support at 167.18. And as I mentioned, should we break that support level, we would drop like a stone. And we did, all the way down to this lower band of the rising uptrend channel. The shorts got squeezed, and all the FANG stocks began to take off and, in fact, made new all-time highs. But remember, they were the only things that were keeping the S&P 500 positive for the year. That all ended right here in July when you saw a bearish key reversal on Facebook, and we had given up in 1 week what took a couple of months to accumulate. This was horrible price action. A bearish key reversal, and the moment we broke that bound, and the moment we began to break down yet again below 167.18, it was all over. We tried to recapture it here in September. That recapture failed. We rolled over, broke down, and we began to put in lower lows. The rest is history. Now, last week we bounced off the 125 level, which was a breakout point back in January. Is this a bottom? I don't know yet, right? The reason why I don't know is because we don't know how Facebook is going to respond to the news that was released over the weekend. Now, if it behaves well, daily chart, if it behaves well, that means that the news may be priced in and that we're nearer to a bottom on Facebook than what you might think. However, if we drop like a stone, which I think that we're probably going to do, look for another leg down on Facebook. Now, leading us over and into the European banks, and the poster child for the European banks is, of course, Deutsche Bank. Monthly chart here. I have been warning about Deutsche Bank for a year now, at a minimum. While all the other major banks were able to rebound and stabilize after the financial crisis, Deutsche Bank continues to press down and make new lower lows. And I warned back here and back here, beware of the $10 mark on Deutsche Bank. You don't want to see a bank, especially a money center bank, trading down in the single digits as Deutsche Bank is right now. Now, last month we broke it. We closed down in the single digits. We took out the lows of 2018. So far this month, we have a bearish key reversal with only a few trading days left to go. How is this setting up? Not pretty. What is going on over at Deutsche Bank? What skeletons from the financial crisis do they still have in their closet that they have not written off yet? Beware of Deutsche Bank. And, of course, the other banks as well, because the question must now be asked, who has counterparty risk to Deutsche Bank? General Electric. All right, so the American companies are not, of course, guilt-free as it relates to corporations that have some serious problems. General Electric, monthly chart, has an RSI of 13.77. This is significant. And it looks as though we're going lower. But the time is coming very, very soon when GE is going to be a buy. And I've said this before, and it's worth repeating. At current, the yield on GE is 6.34%. That is not a safe dividend. Expect a dividend cut. Then expect a sell-off. It's on that sell-off that I want to be a buyer of General Electric. Daily chart. A very bearish week last week, but we should see a rebound fairly soon. We have a bearish key reversal and clear resistance at $9 per share. Another bearish key reversal on the 19th. It looks as though we are going lower. We still have some real serious volume to contend with. Again, folks, we want to hear those magical words, the magical headlines. GE cuts their dividend. That will be music to my ears. ROST stores. This is our first extreme oversold stock. This was an IBD darling, Investors Business Daily. It is now broken, and we are now nearing some very good support levels down in the high 70s. And that's where I think we're going to go, to the high to mid $70 range on ROST stores. Big down volume, and you can't fight these guys. These are institutions selling, not mom and pop selling 100 shares. So allow them to distribute their shares. Daily chart. We have RSI at 18.58. Again, big volume. I think that we're still going to go lower here, but soon we're going to have a very nice situation where we have RSI in our favor. It's close to being in our favor, but not quite yet, because we haven't hit historical support yet. Members, we're going to talk more about ROST stores and a good entry point on the week ahead commentary coming out later today. The next chart up, DLNG, Dynagas LNG Partners, RSI 14.28. Very interesting stuff here. I think that we're very close to a bottom. We're going to be looking to get long of DLNG at a historical support level. Members, later on today on the week ahead commentary, we'll talk about those historical support levels, and we'll talk strategy of as to when we want to get involved. But let's remember, we still have institutional distribution here, so we need to enter with caution, and it must be at an historical support level, because that's where our risk to reward is most in our favor. FEYE, not so much a extreme oversold stock, but we are flashing an inverted head and shoulders setup, left shoulder, head, right shoulder. We did break out. We have since pulled back. Let's go to a weekly chart. It's cleaner. Here you have it. We broke out of this wedge formation. We've pulled back. We've rallied off the lows. I would like to be a buyer of FEYE on strength, meaning a breakout above this upper band of resistance. Members will talk more about an entry point for FEYE to the long side on the week ahead commentary, again, coming out later on today. This is a member stock chart request. New Age Beverages weekly chart. We had a big spike higher and a breakout the week of the 17th of September. We went parabolic. This appears to be a short squeeze, a short covering rally, and we have now pulled back and we are consolidating. The week of the 12th was a very bullish week in that we flashed a bullish reversal week, implying that we had retested support and it held. There were buyers down there willing to step in and bid the shares up. Last week, not much happened. It was an inside week. No new high, no new low. Volume about average. Stokes are putting in higher lows. No breakdown yet, but caution flag on the track. I would be wary of a breakdown below this support level here at 3.50. I would be bullish on a breakout and a close above this dotted blue line, which would be a breakout above resistance. Daily chart. All right, so the daily chart looks very similar to the weekly chart in that it's a lot more noisy, but here's your defined upper band of resistance and your two lower bands of support. We need to see a breakout above this upper band of resistance. And on the 23rd, you could see that we rallied and we sold off. So you have sellers above here. So just be careful. Don't buy on strength if it does not appear poised to close above the upper band of resistance, because the rally may just fade as it did on the 23rd. Members, let's segue now over and into the week ahead commentary, which is where I review Market Pulse Check, which is a review of the health of the overall markets. Where have they been? Where do I think that they're going? Then we're going to talk about our positions. And of course, we'll do a deep dive into our watch stocks. If you're not currently a member, again, remember, new website coming out. Join now. Save a few bucks on membership costs. And I hope to speak to you soon. Be well.